On the US oil, it has been a profitable week for us on the US oil so far, as we have been buying this commodity ever since we identified that buy pressure resumed at around the $65 area, which also happens to be the lowest point price action had been since December 2021. And also that area is a strong support line of the descending channel we identified on the higher time frame. So we shall be looking at that in a moment for those who were not part of our previous live session. So the identification of the buy pressure here on Monday was quite a good signal that price action will be moving to the upside. But we needed a confirmation. As you can see here, during the first 24 hours, we saw our price action was trading between the channel around the $67.50 level, which happened to be the resistance point for the week that was on Monday. Then we had the support line of the week sharing a confluence with that key level at the $65 area. Now you all know what we look out for whenever we have this kind of simple setup. We need price action to either break out or break down of that channel for trading opportunity. And this was exactly what happened on Tuesday here, after we saw the breakout of the $67.50 level, triggering our buy position. And it was at this point we had our first buy position for the week. Then we also had opportunities of adding more positions at breakouts of key structures, which we actually identified during the live session. Key structures like the $68.50 level. Then during the course of yesterday's live session too as well, we also identified this channel between the $69.40 area and the $69 area, which falls right around that bullish trend line that has been supporting this bullish momentum since the beginning of the week. So we added another position here, making it the third position for the week. And during the early hours of today, we also added another buy position at the breakout retest of the $70 area. And for those who have been part of this profitable journey since the beginning of this week, well done to you guys. Kudos to you for being on standby, as you will currently be running with over 500 to 600 pips in profit if you are taking all the 4 positions that we have currently in this market. And you all know what we do whenever we already have a significant advantage on the market structure. We want to be securing our positions by moving our stop loss accordingly to protect whatever profit we had made so far, so that we don't lose out on whatever we have made in case we have a sudden pullback that will happen in this market. So in this case right here, what we want to be doing is to move our stop loss to somewhere just right below the $69.85 level, so that we can give room for price action to breathe at this area, probably in anticipation of a trend continuation to the upside. So now that we have moved our stop loss accordingly to lock in some profit, what is our next line of action going into the New York session today? What do we want to be looking forward to? What do we want to be seeing? And for those who had missed out on this opportunity, are we going to be having another chance to be able to join this potential rally to the upside, or are we likely going to be seeing a bearish momentum anytime soon? As you all know, with the buy momentum we have been enjoying since the beginning of the week, and looking at the current market structure, a retracement phase seems overdue at this particular point in time. So let's see what is going on the higher time frame, so that we can have a better perspective of what is happening here, and so that we can use whatever information we have to make a decision for today. So in that regard, I want us to scale up into the 4 hours time frame. That is where we are going to be focusing on today. And on the 4 hours time frame, we shared this during the live session on Monday, where we identified a bearish momentum since the beginning of this month. And to further emphasize the strength of the sellers in this particular market, you can see that we have price action transition into a descending channel, which was identified after connecting the series of lower highs which we have here and the series of lower lows which we have at this point. And at the beginning of the week, we saw our price action was trading around the support line of that descending channel, which I was talking about earlier on the 1 hour time frame, which definitely also shares a confluence with that $65 level, which is the lowest point price has ever been since the December 2021. And look at what happened since the beginning of the week. We saw our price action continue to find higher highs, respecting that bullish trend line that I identified earlier on the 1 hour time frame. So what this simply tells us is that price action is still respecting that descending channel, trading within that structure, as we saw buy pressure resume here, bringing price back into the resistant line of that descending channel. Now, with the current situation we have right now, the next question we want to be asking is this: will the descending channel here be respected one more time in such a way that price will find price selling pressure below the structure to incite another wave to the downside? That is one possible scenario we are going to be looking forward to, which is also going to be an expectation we shall be leaning towards because of the long-term bearish momentum in this market, and for the fact that price is currently trading around that resistant line of that descending channel. Then another possible option that could happen here is price action breaking out of the resistant line to give us a clue that the resistant line is no longer strong enough to hold selling momentum. Then a breakout retest of that structure definitely will be giving us an opportunity to buy the US oil for today. So now, with the situation we have right now, we want to be looking at how price action is currently reacting to that trend line, which also falls just right around that $70 level. Remember that key important structure that was broken during the course of last week's trading session. And since the breakdown of that $70 level last week, you will see that buyers have been finding it difficult to break out of that structure, as every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. You can see what happened around this area. On Friday, price was even not able to get into that structure. The same thing also happened on Tuesday here. Price was unable to get into the structure, but as soon as price got into the structure yesterday during the live session, we saw a sharp rejection of that structure where the candle there closed in the form of a shooting star pattern. And from a technical standpoint, a shooting star is a signal that sellers are still very, very strong in this market. So we saw the sharp rejection here, and since then price is yet to find a new high at this particular point in time. And one thing we have noticed here in the last 18 hours in this market is the fact that price has been trading between the $71 area and the $70 area, to give us a clue that there is an indecision in this market right now, as participants are not sure of where price action is likely going to be going as we head into the New York session today. Now, you all know what we look out for whenever we have this kind of simple setup. We definitely want to be seeing a breakout or breakdown of that channel for a signal of where price action will be going. So we have a resistant line right now at the $71 area, a strong psychological area where we need a breakout of that structure to give us a clue that a bullish momentum is gradually coming in this market. However, if the support line of this channel, which falls around the $70 area, remember the structure was broken during the course of last week's trading session, where from a theoretical perspective, a breakdown of a significant structure here has a tendency of price coming back to retest that structure, selling pressure below that level to incite another wave of bearish momentum to the downside. So if a breakdown of the $70 area happens, followed by selling pressure just right below that structure, definitely we'll have no choice than to start thinking of selling the US oil. So with the information we have gathered here on the 4 hours time frame, I'm very sure you are well equipped in such a way that you will be able to use this information to make a decision on our lower time frame. So in that regard, let's scale back down into the 1 hour time frame. Let's see how price action has been reacting to the $70 area since the beginning of today. Now, scaling back down into the 1 hour time frame, remember we are the resistance point of that descending channel we identified on the 4 hours time frame. So I will be zooming right into that structure that we looked at on the 4 hours time frame. So look at what we have here. So this is above the $70 area. This is the channel we identified on the 4 hours time frame. As you can see, we have the resistance line here. This was the sharp rejection during the later part of the New York session. Price is unable to find a new high here. As you can see, now we have a lower high at this particular point in time. And if you zoom out a little further, you will see that price action appears to be transitioning into a reversal pattern in the form of a double top structure. So we have the first touch here. Price action came back into the $70 area. Price was unable to break the previous high. Price comes back into the $70 area, and what do you think you can see here? You can see a potential reversal pattern in the form of a double top structure. And you all know what we look out for whenever we identify such a structure. We want to be identifying a neckline, which definitely we want to be using as a yardstick for trading activity for today. So we have the neckline coincidentally falling just along that $70 area. Remember the importance of that structure. Now what we want to be seeing to make this reversal pattern mature is price action breaking down that neckline area, setting pressure below that structure to give us that beautiful confirmation to join a trend continuation to the downside. And remember, all our buy positions here, we have moved our stop loss to secure this current position as we wait out to see how price action will be reacting to the $70 area to decide if we are going to be selling. And if a breakdown of the $70 area happens, it will have happened that the resistance line of that descending channel has been broken back to the downside, where obviously we are back into the sell territory just right below the $70 area. Then we could be looking forward to more selling opportunities below the structure. And one other thing that will emphasize the strength of the potential reversal pattern here, remember at the beginning of the week we have this bullish trend line which has been supporting the bullish momentum on this chart since the beginning of the week. And remember, I told you that this is going to be our yardstick for trading activity for this week on the US oil. And one thing I said here is that if price action continues to trade above the bullish trend line, we shall feel comfortable in our buy position and continue to look out for more opportunities to add more buy position to our existing trade. But if it so happens that the bullish trend line here is broken to the downside, then definitely we might likely be seeing a momentum shift anytime soon. And if you look at what has been happening on this chart in the last 9 to 10 hours now, you will see that the bullish trend line appeared to have been broken to the downside. In fact, we have a retest of structure followed by an engulfing bearish candle, bringing price back into that potential neckline area of that reversal pattern we identified at the $70 level. Now, with the situation of things are looking more bearish at this particular point in time, where you could have your sell stop order below the $70 area here, hoping that price action will strike through, trigger our sell position, and if we continue to see sell pressure resume below the structure on our lower time frame, definitely we want to be open to add more position to our existing trade. And in fact, if the sell momentum continues, the current market structure has a tendency of giving us multiple entries, as we have structures like the $69.40, $69 zone area. Breakdown retest of that structure will definitely be welcoming additional position. We also have the $68.50 level breakdown retest of structure, adding more position. $67.50 level, another area we can be looking at to add more position to our existing trade on the US oil. So this is what we shall be looking forward to sell the US oil for today. I'm leaning towards a sell momentum on the US oil, so we shall be anticipating that breakdown of structure. So we have a sell stop order sitting just right below that neckline so that it can trigger our sell position in this market. Now, as usual, we always try to ensure that we have the other perspective too as well. The market is very, very fluid. anything could actually happen, and for us to be profitable in the market, we want to be as fluid as possible. That is, having the ability to be able to change stance immediately we start seeing price action doing the opposite of what our expectations are. Now, with the situation we have here, despite the fact that we are considering selling the US oil for today, we cannot ignore the potentials of the buyers in this particular market. Obviously, since the beginning of this week, it has been bullish, as there is still a chance that buyers could still take over this market. So if a bullish momentum is likely going to be happening in this market, well, what do we want to be seeing to be part of that bullish momentum? Well, for me at this particular point in time, I will be considering that the $71 area should be an area we should be focusing on to buy the US oil. Now, with the situation here and seeing what has been happening since the New York session yesterday, where selling pressure has resumed around that area, definitely we want to be seeing price action take out all the sell positions here by breaking out of that $71 area, giving us a beautiful signal for an opportunity to buy the US oil. And if that is going to be happening, well, we want to be seeing buy pressure resume around that area, giving us confirmation of liquidity for buying power around that area to join that trend continuation to the upside. But personally, this is not what I'm looking forward to, but what I'm simply saying here is that if it so happens that price moves in that direction, we want to be on standby so that we can catch that opportunity when it happens. On this one, I'm a bearish expectation on this one for today, but if it happens that price action breaks out of the $71 area, we want to be on standby to catch that move as well. So these are my views here on the US oil for today. If you have questions, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. And you may also want to screenshot my screen so that you can use it as a reference point when you're about to make your independent or individual decision on this commodity.